Hello, my name is Katie St. Norris with St. Norris Wealth Management, and in this video I would like to talk about 5 tips for people that using services as Airbnb, HomeAway, for rent by owners, and others. Let's get going. Is it possible that your rental income will be tax-free? Yes, it is possible because of the 14-day rule. Your rental income is tax-free if during the tax year you rented out your home for 14 days or less, and you also use that house or vacation home yourself for 14 days or more during the tax year, or more than 10% of the total days that is rented to others. If you rent out just a room in your house, the same 14-day rule apply as you would rent the whole house. If you rent your house for 14 days or less, you don't have to report any income whatsoever. But on the downside, you also cannot take any deductions either. What happens if you receive an IRS letter? Because of reporting requirements, Airbnb, HomeAway, and similar companies, they have to report to the IRS all income you received during the year, regardless if it's been 14 days or more. What happens is that you don't have to include that rental income on your tax return, but you do have to have proof that your income qualifies for the 14 days exception rule. And any time you spend on your property, house, condo, doing repairs, and any type of maintenance, it doesn't count as personal use of your home. Now let's talk about direct and indirect expenses. For direct expenses, you can deduct 100% of your direct rental expenses. That will be commissions you pay to your rental agency, advertising fees, insurance expenses for your rental. For general rental expenses, that will be maintenance, your utility bills, your HOA fees. Also, you must allocate your deductions for your general expenses based on the amount of time the property served as a rental compared to the total time was used by you during the year. When it comes to renting a room in your house, you cannot deduct 100% of your expenses like mortgage interest and property taxes. These must be apportioned between your personal use and the business use of your residence. And important to mention, Form W-9. Airbnb, HomeAway, Flipkey, and similar companies, they must withhold full 28% of your rental income if you do not provide them with a W-9 form. In most cases, your effective rate will be way lower than 28%. So don't forget to fill out W-9 form. Next item on the list. Where do you have to report income from your rental activity? It could be on Schedule E or Schedule C. And the difference is you report on Schedule E if you just rent a room or a house and you do not provide any additional services. If you provide substantial services, say like laundry, breakfast in the morning, and you serve as a tour guide for people that renting out your room or house, you have to report that income on Schedule C. And remember, if you report it on Schedule C, that income is also subject to self-employment tax. Also, don't forget to claim your deductions. The most commonly missed deductions for rental income is actually mileage to and from your rental property, meals, overnight stay, if you have a membership at places like Costco or Amazon. You can deduct that membership. And when it comes to services like Hulu or Netflix that you provide as an extra for your clients, you can also deduct those. I want to thank you for watching, and I'll post any additional links and information in the description for this video.